All right, let's get right into it. Today we're breaking down Strategy Inc.'s latest earnings. And what we're seeing here, well, it's not really a software company anymore. It's something else entirely.
Okay, so Strategy Inc. drops a headline number, a $2.8 billion profit. But here's the hook, the thing you absolutely need to understand as an investor. That profit has almost nothing to do with their software business. The real story, the one we're going to unpack, is how they're manufacturing this number.
So, let's start with those massive top-line numbers that got everyone talking.
Check this out, a staggering $3.9 billion in operating income just for Q3.
Now, here's where it gets really interesting. Just look at the comparison. Q3 last year, they were deep in the red, a $432 million loss. This year, a $3.9 billion gain. I mean, that's not just a turnaround, it's a whole different reality. So you gotta ask, how on earth did they do that?
And boom, here's the answer. It's not cash from operations, not even close. Their software business, that brought in about $129 million. That entire $3.9 billion gain is an unrealized, on-paper gain from the rising value of their Bitcoin. Let me say that again. It's an accounting gain, not a real operational profit.
Okay, so that naturally leads to the next big question, right? If the game is to stack Bitcoin, where are they getting all the cash to buy it? This, right here, is the core of their entire machine.
Get this. In just one quarter, Q3, they raised about $5.1 billion. And let's be clear, this money isn't for R&D on software. It's pure fuel for the Bitcoin acquisition engine.
And this chart really lays it all out. You can see their capital engine firing on all cylinders. They are not just tapping one source. No, they pulled in $2.5 billion from a brand new preferred stock IPO, another $2.2 billion from their common stock. They're hitting every lever they can all at once.
What they built here is a really complex capital markets platform. They're running multiple at-the-market programs. You'll hear them called ATMs simultaneously. Just think of it like this. They've turned on a bunch of different taps to the public markets, and the cash just flows in. And as soon as it does, it's straight out the door to buy more Bitcoin. It's a nonstop, perpetual financing machine.
So you might be wondering, how do they manage all this complexity? Well, one thing they do is they don't leave you guessing. They've literally published their own rulebook for investors.
And the executive chairman, Michael Saylor, he's been crystal clear about the game plan. He calls it a digital treasury business model. Basically, they use their mountain of Bitcoin as collateral to create these special credit instruments, which are their preferred stocks. And the big draw? Really unique tax benefits.
And this is the secret sauce for their preferred stock investors. See, for tax purposes, the company technically has no accumulated earnings and profits. So what does that mean? It means the dividends they pay out aren't taxed as income. Instead, they're treated as a return of capital, or ROC. It's tax deferred. And they're telling investors they think this can go on for 10 years, maybe even longer.
On top of that, they've even invented their own metric, which they call MNAV. You know, it's pretty simple when you break it down. It just measures the premium of their stock price compared to the value of the Bitcoin they actually hold. And this isn't just some vanity metric, it's a critical part of their playbook. It literally dictates when and how hard they hit the button to sell more stock.
And this is that playbook, right here. It's incredibly transparent. Look, if the MVPNA is below 2.5, they're just issuing stock tactically to cover costs. But once it starts climbing, between 2.5 and 4, they get opportunistic. And if it goes above 4x, they go into active mode. The rule is simple. The bigger the premium, the more stock they sell to buy more Bitcoin. They just feed the machine.
And for their newest creation, this STRC preferred stock, they've doubled down on transparency. They've built another rules-based system, but this one is all about adjusting the dividend, and the whole point is to try and keep that stock trading right around its $100 price tag.
And again, the rules couldn't be clearer. If the price dips below 99 bucks, they're going to recommend a rate hike. If it gets above 101, they'll look at a rate cut. And the key thing here is they actually follow their own rules. They just did it, bumping the November rate up to 10.5%, right in line with this framework.
Okay, so let's put it all together. You've got the paper profits, the non-stop capital raising, these super transparent rulebooks. Where is this all heading? Well, this entire massive, complex machine, it all comes down to one single number.
$150,000. That's it. That is the price of Bitcoin they are baking into their official full-year guidance for 2025.
And just to be clear, this isn't some wild guess or a target price. No, this is their formal guidance to the street. They are telling investors on the record that their forecast for about $24 billion in net income, for roughly $80 in earnings per share, all of it is completely dependent on the price of Bitcoin reaching $150,000 by the end of the year.
So that really brings us to the bottom line, the fundamental question every investor has to ask themselves. What exactly are you buying here? Is Strategy Inc. a tech company that happens to own some Bitcoin, or is it really a leveraged trust, one that's using the public markets to place a huge all-in bet on a single, highly volatile asset? We've laid out the mechanics of the machine for you. Now the ultimate call, well, that's yours to make.